Looks like the broad sell-off on Wall Street overnight has spilled over into Asian markets. We're seeing quite a bit of profit taking across the board. There's been lots of talk recently about potential correction or at least a pullback, and that seems to have happened with what we saw recently on the Argentina debt situation. So that seems to have been the tipping point. We're seeing Hang Seng set to break its 8-day winning streak. It's looking to end on a negative note. Australian index as well as Singapore among the worst performers today. Technology shares and bank stocks leading the drop. Singapore in particular, UOB and DBS both released earnings today. They both beat analyst expectations on Q2 results, but that wasn't enough for its stock prices. UOB in particular saw a sell-off and that prices dropping to a 2-week low. It warned that bad debt charges had doubled in the Q2, with customers struggling to service some of the high-end property loans. And we also saw some positive Chinese data, but that didn't help to offset the negative sentiment in the market. China PMI for July came in at 51.7. That's an 18-month high. HSBC also released its manufacturing PMI. It came in also at 51.7, just slightly under the initial estimates a few weeks ago, but that's still an 18-month high. Both set of numbers didn't really have an impact on the market. We're seeing gold prices still holding on to its losses during Asian trading sessions, but that could extend as we go into tonight's US macro data releases, where we could see some positive data on the jobs front. Now looking ahead, we'll be watching out to see whether the profit-taking mood continues. We're seeing quite a bit of good corporate earnings and macro data coming out from the US, and today we saw some positive Chinese numbers with PMI data coming in strong at an 18-month high. So quite a bit has been sentiment driven with the rising political risk and what we saw with the Argentina debt crisis. So those will be developments to watch out for. Other things to watch out for next week will be some data releases. We might have a play on the Aussie dollar with quite a big round of data coming out from Australia for export numbers, unemployment data, as well as the RBA's rate decision. We're not expecting any changes on the interest rate. It's probably going to stay at 2.5%, but we'll be watching out to see whether there's going to be any dovish tones with their recent concerns over overvalued currency hurting growth prospects. In China, we're going to get some data as well that could give a sign of whether consumers are spending more, and that could have an impact on retail stocks and then maybe to some extent Aussie dollar as well. We'll get the non-manufacturing PMI over the weekend, as well as HSBC's China Services PMI in the early part of the week. In Japan, we could see some yen downside. The BOJ is going to make its interest rate decision. There hasn't been a lot of positive data coming out from its economy. Probably we're not going to see any changes, but maybe a bit of a dovish tone in its statement. So some downside risk to look out for on the Japanese currency.